You save every month, you watch your bank account balance grow, you skip fancy dinners, and you are responsible or even disciplined with your money. But this is where most people are failing. They are failing behind. Now, stick with me for the next few minutes and I will show you why savings is making you broke. Welcome to my YouTube channel, everyone. My name is Nancy, and I'm your favorite internet wealth mindset, wealth builder, and money architect. And I'm here in the next few seconds or for a few minutes to describe why savings is still making a lot of people broke and they think they're doing the right thing. Yes. So, like I said before, you save very well, you go to work, you come back, you pay your bills, you skip fancy dinners, you skip your Starbucks, you skip Costa and all of those things, but yet you feel disciplined and you're like, okay, yes, I'm doing it. If that was possible and if that worked, everybody will be rich. Now look at your bank account. You've been working for the last 40 years. Now, if I was to challenge you and ask you, that amount sitting in your bank account, is it going to last you for another 40 years? You already know the answer. No. So this just goes to show that savings is not designed to make us wealthy. So let's start. So from what time when we're kids, the money lesson is we earn money, we spend less than you earn, and that you save the rest. So you rinse and repeat, and you think that is working. If that was genuinely working, would you be in the same situation that you are right now? That does not work. Savings in of itself is not designed to make you wealth. So let's address something. Did you know that inflation rates, yes, for the last 30 years has gone between 2.5% and 3%. So let's just round it up to 3%. So every time your money is not getting you that back in interest, you are actually losing buying power. Now, the comfort with savings is we see the amount sitting down and we think, okay, yes, the amount is there. But however, did you know that your £10,000 today, if you leave that same amount in your account in 10 years, will be worth £8,600? Yes, but you're probably seeing the figure £10,000. Why? Inflation is the silent killer eating into our funds. So how do we mitigate this risk? Good question. Now, don't get me wrong, savings is so important. It's important. Why? Because you must have your emergency funding, because what you don't want to do is start liquidating anything you have to be able to live day to day. So what is an emergency fund? An emergency fund just covers your expenses for a certain period of time. So some people build emergency funds to cover them for 3 to 6 months. You know, some people have 12 months. I personally have 12 months because that's just my comfort blanket. Okay. So whatever your expenses is in that particular month, you must have at least 3 to 6 months sitting in an account doing nothing, just waiting, because that is what an emergency fund is. And also, I would also encourage or recommend that you have extra savings on the side. That's liquidity. You understand? So if you wanted to do something, for example, you want to do your hair, you want to do your nails, you should have access to that. Anything above those two things, your money should be working for you as opposed to sitting down doing nothing and being eaten by inflation. Okay, so savings is good for that, having your emergency fund and small liquid cash on the side. But anything apart from that, your money should be working for you. Now, the way wealthy people think is that they think that, okay, now I personally look at my money as my employees. I send them out every single month to go make me bigger returns. This is essentially how wealth is built. Yes, I want you to think about it. Wealth is built by your money working for you to become more. So imagine a sower sows seed in the ground. Of course, you're going to sow one apple seed, but I don't expect one apple seed to become one apple seed. I expect it to become a tree of apples. This is essentially what investing is. So now this is how to make your money work for you. You need to invest your money into assets that will generate you money on the side. Okay, so what are assets? Assets is anything that you put your money in that gives you a return on investment. Now you can look at assets in different ways. First of all, let's explore the stock market. So now you can look at equities as an asset or real estate as an asset. Equities are having shares in companies or in businesses, little shares, by investing in them. So imagine having shares in Apple. You are buying a piece of Apple business. So that is equities. Over a period of time, your money should grow. Yes. And this is not financial advice, it's just an example. Okay. And you get dividends and growth. Now, for beginner investors, I would always recommend that they don't just start investing in individual companies. No, you might get burnt. Why? Because if you don't have the subject matter expertise to be able to do your analysis to show that, okay, I know that this company is going to be here in 10 years or 15 years, then I would stick to investing in funds, ETFs, exchange traded funds, or index funds. An example is the S&P 500. This has the 500 core of the most performing companies, the best performing companies in America. And even Apple is part currently, this is 2026, of the S&P 500. So instead of gambling by buying individual companies, I would just focus my energy on investing in funds. Now, if you look at the returns on these funds, for example, the S&P 500 for the last few decades have given us a market-based return of about 10% a year. So now you see how your money is working differently. In your savings, let's say your savings rate is 1.5%. Inflation is 3%. So you're getting poorer by 1.5%. Now, by investing in a fund, e.g. the S&P 500, your money and your S&P 500 returns on average annually 10% a year. Last year, 2025, actually returned 16%, but that's a different conversation. Now you see how your money is working, that even if inflation is 3%, you have a net profit of 7%. And guess what happens? Year in, year out, you keep investing and reinvesting your dividends, and now you give compound interest, which is the eighth wonder of the world, an ability to work for you in your favor. That is what Einstein says. Einstein says compound interest is the eighth wonder of the world. So you don't really get rich from the principal, which is the capital you put in. You get rich from the returns that the market gives you. Plus, year in, year out, those returns become profits, and profits built on profit and profit. That is just how it's like a snowball effect. That is how wealth is built. So let's go back. Rich people or wealthy people don't just sit on money, they invest in assets that give them a return on investment bigger than any savings account. So you can invest in equities. You can also invest in real estate. Real estate is one of the oldest ways to invest, brick and mortar. And there are other ways you can invest now in real estate through REITs, real estate investment trust. So these are similar to equities in the sense that you can get it from the stock market, and the entry criteria for investing in these REITs are quite low. So a physical property, you would need to put a huge deposit down. But with REITs, you can start investing with as little as £1, £2, £10, dollars, euros, wherever country you are, you can start investing in REITs. Another form of investment I would always recommend is invest in yourself, because you have the capacity to earn is limitless for the capacity you can earn or make money once you invest and increase in value. So that's another type of investment. You can invest in your knowledge, in your skills, and your earning capacity is unlimited. So these are different ways to invest, but please do not leave your money sitting idly in a savings account. You're getting poorer every single month. Now, as an investment coach, I have taught over 1,000 students on beginner investors on how to invest the right way and the smart way. Now, we do not gamble in the market. We're not going to invest in individual stocks. No, 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 no. As beginner investors, I will always recommend that we start investing in funds, ETFs, and REITs, real estate investment trust. Okay, so the REITs will give us income on the side, yes, by investing in them, and they give us dividends, and the ETFs will give us growth. So by the combination of both gives us exposure into different markets, diversification, we reduce our risk, plus we make income and we have growth. So we have a balanced and diversified portfolio. Now, if this sounds like something you would like to explore, I have a link in my bio. I have a masterclass. I have masterclasses and I have recorded classes. Click the link in my description and get any of our beginner friendly classes. What I do in the classes, I teach you how to invest. I show you examples of what you can invest in. I help you build your automated way of investing. So you take out the procrastination from it and start building wealth. Okay. And then you are added to our WhatsApp community where you have lifelong support and help in this journey to building wealth. Investing is a lonely sport, but when you have the same set of people that think like you, like-minded individuals in a particular group, then we're doing life together as a as family members. So if you like this kind of content, please click on tap the like, subscribe, and I'll see you on the next one. But in the meantime, savings is a scam. I'm not saying don't save, but save a little and invest more so that your money is consistently working hard for you. See you on the next one and subscribe for more content like this. Bye.